Rakesh Sharma of Bajaj Auto joins us, and this is ET Now on the go. We are in the city of Pune, and apart from just talking about Bajaj Auto, what we also would like to bring out for our viewers is that why has Pune really emerged as the base for auto manufacturing, and going forward in terms of scale and scalability, how much more that can go. So Mr. Sharma, first, thank you for having us over. We've always looked at Pune as the go-to city when it comes to the manufacturing space, and especially auto. What is so special about Pune that makes it perhaps the Detroit of India?
Thank you, Nikunj, for having us on the show. Pune is actually quite a delightful city. First of all, it has got great climate. It lies in a rain shadow area, so it doesn't have torrential rains, but it has lovely weather. And that, I think, would have attracted the people first, which is how the cantonment side of Pune came in. And I would say that we have to credit the pioneers with the start of the industrialization of Pune, which are, the families of Kirloskars, Bajaj, Firodias, and the Kalyanis, and people like that, who came from different places and set up their industries. And then so on and so forth. And since then, you have a very eclectic mix. You have the corporate crowd, you have the military, the armed forces crowd, you have a good art and culture segment with FTII and etc. So it's really a very, very good mix of people. And therefore, more and more people keep getting attracted to the Pune proposition.
Okay. I'm going to take the clock back. Bajaj Auto. As times have changed, the company has also progressed. From Chetak scooter to Pulsar bike to exports, and now entering to EV as well as partnerships with KTM and Triumph. Let's first understand the setup of the two-wheeler space in India. 5 years ago, it appeared that in India, two-wheeler sector will continue to grow. As penetration will grow, and as the cycle wala will migrate from cycle to scooter and scooter to motorcycle. But some of that thesis post-COVID has got challenged. Why is that?
Well, Nikunj, the thesis started to get challenged even before COVID. The signs of the slowdown in the two-wheeler segment were visible in this even 2 years before COVID arrived. And there are multiple causes for this, in my opinion. First is that this was a period when the economy was struggling a bit, right? Just when it was struggling was the arrival of new regulatory norms, right? From insurance premium to emission controls to the new BS6, which imposed a lot of costs. So when the incomes were falling under pressure, the costs and the prices of the bikes were rising. And you have to remember one thing, that like 70% of our customers earn less than 40,000 rupees per month. So it's that kind of a customer we are talking about. They had got, and then COVID came and they got very badly hit. Now, if you step beyond this occurrence of the last 3-4 years, or this unfortunate confluence of negative drivers, if you go beyond that, I think there is still fundamentally, there is still some strong drivers. There is two-wheeler growth is very strongly correlated with urbanization, with penetration of roads, with the young demographics of our population, which requires the need for mobility, and of course, slight improvement in the purchasing power. These fundamental drivers are still there. And overall, penetration is still less. There will come a time where people will have cars and they would also want a couple of two-wheelers in the family. We are far from that position as yet. So as the economy improves and the knots get sort of untied, we will again see the pendulum swinging the other way, and we will start to see a period of growth even in the two-wheeler industry.
So when do you think the sector per se will go back to double-digit growth? It's not, I don't see happening it this year. Could that happen next year?
Like I said, a lot depends on the economy. But if you just compare FY23 with, let's say, how we exited in quarter four, how quarter one performed, and how quarter two is shaping up, we can already see that the single digit negative which the industry was in has now moved into single digit positive. So quarter one was better than quarter four, and July and August are seeming better than quarter one. So it's still single digit growth, but there is a point of inflection which has been navigated.
There's a very interesting change in the automobile market, and I'd like to draw a parallel here. The SUV market, it accounts for more than 50% of the total sales. The typical Maslow hierarchy in India was migration from cycle to motorcycle, motorcycle to a small car to an SUV. But the first time buyer is not buying a cycle, he's not buying the motorcycle, but he's buying a SUV. Is there a change in the way how patterns are emerging now?
Well, even today, in a lot of these in a lot of the motorcycle segments, almost 40 to 50% buyers are first-time buyers.
Okay.
You know, whether you're talking about the entry level or whether you're talking about the top end. So there is a lot of fresh influx, which is a very good thing. A very important contributory factor is the penetration of retail finance, which used to be a few years ago only 40%. But with all the digitization and all the initiatives of the government around Aadhaar and all that, the ability to take risk on credit has got vastly improved. And penetration of finance, retail finance, is now almost 76% in motorcycles and 90% plus in three-wheelers, organized finance I'm talking about. So all this has facilitated a movement upwards, because everyone, wants a better life, wants a better product, wants a better proposition. And that's and as soon as you combine that with purchasing power, whether through retail finance or directly money in the pocket, you see an uptrade trend which is there. And that is what is playing out even across the motorcycle industry. If you see if you divide the motorcycle industry into two halves, the 125cc and above, and the 100cc segment, and if you rewind 5 years back, you will find that the 100cc segment 5 years back was almost 60% of the industry. Today it is about 50%. And the 125cc plus segment was 40%. That has also become 50%. So this is just volumes in terms of margins and revenue. It is now the dominant share of the motorcycle industry. And that signals two things. One is that there is a upwardly mobile customer. And secondly, I would say that at the very bottom of the pyramid, that customer is very weakened after COVID, and they have not been able to come back to the consumption cycle. They are not still impacted by retail finance. It's doesn't penetrate them. So that the very bottom of the motorcycle industry has fallen. What has gained is the middle and the top.
Okay. If I take the clock back 5 years ago, less than 10% of your total profits were coming from exports. That number is nearing 50% now, and 46% of the total top line, according to the last data, was coming from exports. That has worked like a charm for you. But have you reached a peak? Because you are there in almost 100 countries now. Your distribution network is set up. Those countries where you're present have the unique problems. So my point is that what has worked like a charm for you in terms of creating a leverage, in terms of giving you a fillip, has that edge now going to get blunted going forward?
Well, first of all, you are right. Almost half of our production is exported to over...
Which is a great strategy.
Thanks for that. To over 90 countries. We don't get into segmental level profits, so I will sort of skip that data point. But yes, exports is a very substantial part of our business, and it's reflected in everything which we do, whether it is in the people we deploy or in our product development strategies, etc. I think that the export opportunity is just unfolding.
Okay.
We are far from seeing it getting exhausted. Because of the same reasons which I sort of alluded to when we were talking about India. If you take a continent like Africa, I mean, Africa, the scope for the two-wheelers in parts of Latin America, parts of Africa, is enormous. The story has just started over there. And the story is just one about good quality product being available for the African customers. The moment retail finance comes in, and there are countries like Uganda and Kenya, where retail finance, organized retail finance has made its appearance. When that lever steps in, we will see a jump shift in the expansion of business in Africa. And also in, I would say, in Latin America or the emerging markets of the world. So I would say that we are in a very fortunate position that we have got substantive positions in many, many, many countries. And as the macroeconomic issues and the clouds, the dark clouds sort of blow over, we will again see a growth prospect there. Now, having said all this, the nature of the international business is such that it is more volatile because, because of technological factor, because of macroeconomics, because of the geopolitics which is there, it's not going to be a linear growth. It's going to be a snake in the tunnel. It's going to be up and down and up and down. So it's not for participating in the international business, not for the faint-hearted. It is not for the trader. It is not for the person who is short-sighted. This is for manufacturers. This is for people who have a genuine commitment to a global play. And that is what Bajaj is all about. So I would say that the emerging markets story is far from exhausted. It holds a lot of potential still, and we are very optimistic about it. But we don't think it is going to sort of play out very rapidly. There are going to be ups and downs, and we will go through them.
So the down what you see in the last quarter, was that a one-off?
Well, the down cycle commenced really in the beginning of last year, which is FY23, in I would say April, May, June, when when there were changes which the Fed made, and the dollar became strong, and then there was weakening of a lot of emerging market currencies, which had two consequences. One was that there was devaluation in these countries, which meant there was inflationary pressures. And the second was that the central banks in these emerging markets took a very cautious position and started to preserve their dollars. And, so availability of dollars for international trade sort
of reduced. Has that changed for you?
And that sort of set the whole cycle in the other direction. We are seeing some, let me say, bottoming out of this in the last 2-3 months, and now we are not seeing a rapid return to the period of FY21 and FY22 as yet. But as, like I said, the macroeconomics sorts itself out, and if there is no further geopolitical tension, because the fundamental drivers will start to kick in. And again, I think the pendulum here also hopefully will shift, but difficult to say exactly when that thing starts to gather pace.
Okay. So the domestic sales are coming back. So yes, the pendulum has started shifting.
Correct.
Export, the pendulum has swung and now it has to shift. So yes, can I safely assume that the second half for Bajaj Auto, with both these businesses coming back on track, will be significantly better or will be marginally better than the first half?
I would say that the domestic business is definitely showing signs. There is a tailwind of the industry going.
Significant or increment?
I would say not significant. But it would be good, solid recovery. I'm not a great fan of these V-shaped recoveries, because the sharper and the steeper the recovery is, there could be a problem. It's better for everyone, for the entire ecosystem, for the dealers, for the vendors, for the company, to see a robust recovery, even if it is a flatter recovery. We are seeing that happen. When I'm saying to you that it is a 3 to 5% single-digit positive, it's a nice recovery to see. And in that, the top half of the segment is higher single digits, 8 to 9% recovery.
Which is 125 plus.
Which is the 125cc plus. And in that, the kind of lineup which we have is substantially greater than what our competitors have. So we have a range of products from 125cc to 400cc, which are able to satisfy different kinds of customers. The kind of pipeline which we have for addressing this segment is also really rich and flowing. And when I put all this together, the tailwind of the industry, the stronger tailwind in the top half, our presence over there, our pipeline over there, I can say that there's reason to be optimistic about the second half in domestic. The three-wheeler business has made a very, very strong comeback as the traffic has come.
Yes.
In the three-wheeler business, our market share has now gone up to 80%.
That's a cash cow for you.
Absolutely, it's a great engine, and it is on the back of great products, which are combining very well with the government's initiative of growing the CNG network, and the customer, the three-wheeler driver, the cargo driver, adopting to the CNG-driven products very well and coming in vast numbers to us. So that recovery is very, very robust for us. Exports has bottomed out. It's not following the same trajectory and pace of recovery as the domestic business, but hopefully, step by step, that is also coming back. So there I would say that, incremental to marginally incremental, but domestic better than exports.
Okay, I'll open another layer now, and that is the EV, electric vehicle. You made entry, and now legacy players are coming into EV. What are the chances that Bajaj Auto and the legacy players, they may just start cannibalizing their ICE engine sales while EV will do well? What are the chances that you may cannibalize your own portfolio when you're building your EV portfolio?
Well, Nikunj, first of all, we were one of the first of the larger companies to actually put out EV scooter, which we did in 2019. At a very macro level, let me say at a philosophical level, it is not really up to us to decide whether, we will cannibalize or we will not cannibalize. It is really up to the customer. If the customer adopts the EV, then we better be ready. Our mission is to be, a leader in two-wheeled and three-wheeled mobility on a global basis, and to stay true to that mission.
So last but one question. Do you see the EV portfolio, whether it is e-rickshaw or e-two-wheelers, can they add more than 10% to your total kitty next 2 to 3 years?
Well, that's a function of the
numerator
and denominator. Yeah. But certainly, I think with the kind of political support which is there in India and many other countries, with the kind of switch which has happened in the mind of the customer about the viability of the electric option or the appeal of the electric option, and if the ecosystem of batteries and cells moves, the commercials move in the downward direction, and if all these things happen, certainly the electric transition to electric will continue, and definitely more than 10% odd would certainly, it's in the realms of possibility.
And would you say the new JVs which you're forming up, whether it is with Triumph or whether it is with KTM, they could add another 10-15% in 2 to 3 years?
Well, KTM is a success story, as you know, because that partnership started in 2007 and has gone again to many, many countries, many different kind of product formats, etc. And Triumph is a non-equity partnership, but a very strategic partnership, and has just commenced. The whole idea is to expand that franchise, and as its opportunity will probably be bigger in the medium term than the KTM opportunity. But as the next few months unfold, we will get a better fix of the numbers and what kind of an impact it would have. But directionally, we feel that it'll be bigger than KTM. KTM is still going very strong. It'll continue to hopefully prosper. In due course of time, Triumph should exceed that. But as a percentage, let's see where the ball stops.
Okay. So let me start summarizing our today's interaction, and please feel free to correct me. I don't want to get this one wrong for our viewers and for our shareholders. In the short term, when I say short term, we are talking about next 3 to 4 quarters. You think that the cyclical slowdown in the domestic market is over, exports are coming back. That's the short term view in terms of where the business is moving. In the medium term, I can say that the EV business and the new partnership along with new export ventures, they will be firing in terms of the Bajaj Auto's, progress going forward. And 5 years beyond, there would be a very unique diversification which would be at play. Electric vehicles, more exports, hopefully domestic coming back, better margin realizations, and also the new partnerships. Is that a fair summary of how things will move in the short, medium, and long term?
Yeah, I think that's a very fair summary. The next few years, barring black swan events, are ripe with opportunity. And we have made these plays. We have put together an apparatus which has got a very, very broad interface with the opportunity, which will allow us to capture this opportunity as and where it occurs. Nobody can say for sure that everything will move in the same way. But having put these mechanisms and these platforms to interface with this broad spectrum, we hope that, there will be more hits and misses. And so we can look at the next 5 years very, very optimistically.
I just want to wrap this point of our viewers. We are in the city of Pune, and I've had the pleasure of covering the Bajaj Group at the very early part of my career. And I must say that if a pantheon of great companies in the world ever has to be made, I think Bajaj Autos and Bajaj Group names would be right up there. I mean, a unique company which has created shareholder value, has time and again able to really migrate and adopt to the new need of the hour. And the customer satisfaction with shareholder return, I think is extraordinary. I mean, as a professional, would you say that this company really needs a place on the pedestal?
Yeah, thanks, Nikunj, for that observation. Indeed, I mean, if I sort of dissociate myself from Bajaj Auto and look at it as a company, it is a very inspiring story. And which is why a lot of us, we're very proud to wear this black t-shirt and have the flying bee on our chest. Because we feel very, very good about this company. It's a 75-year-old company, which has, gone through a few revolutions of its own,
all twists and turns,
ups and downs of its own. But even after 75 years, it retains youthful ambition to continue to aspire for leadership now at a global level. And, this kind of a sentiment definitely drives a lot of people in Bajaj Auto.
No, my first visit, I will share with our viewers, was in 2003 in the same unit. And after that, it's been after 20 years. But the ethos, the mood, the energy, all I can say is that 20 saal beat gaye, magar company 20 saal young ho gayi hai. Thank you very much for joining us, and so glad you could find time to be part of this show.
Thank you very much, Nikunj, for making the trip. I hope you will take some time off and enjoy the vada pav and misal of Pune.
Yes, thank you very much. Look forward to that. Thank you.